our schedules and issues as entrepreneurs, which is actually
recording in progress.
That is a great podcast that we could do.
Yeah.
We should talk about that, what it's like being an entrepreneur and the things that pop up and how to deal with them and how to think and in your every given day.
There's just so much, but honestly, like, I'm like thankful for the people that I have like around me, even the students and everyone, because there's so many times where I have a set schedule. Like, I have my calendar. I've given my calendar to like, rest of my team, like for sure, my investors and everything. And I'm like, all right, well, try to fit yourself kind of around the schedule. This is what I have. I have students in the same, like, about 16-hour day or whatever. I have student meetings, I have simulation sessions, I gotta record webinars, we're doing our podcast and whatnot, and then I have to go work on the real estate investment side and all the other things. And then now I'm like, all right, just kind of find that little time that you can in between and kind of fit yourself in there.
Oh yeah, exactly. Yeah, that's actually a good idea. That's kind of what I do with Calendly. When it comes to, like, I just block everything out that I'm not doing, and then I just tell people to schedule through that.
Yeah. But so many times, things will happen that you don't really, anticipate are going to happen, or you don't really plan for. And then I'm like, oh, like, I gotta go take care of that. But it's more of that feeling when I have like a one-on-one session with a student, or like if we have to like record something, you and I, and then I'm like, sorry, Steph, like, I gotta hop off, like, I gotta go.
Yeah. Oh yeah, that happens every day.
Yeah.
Not for you, I'm saying with me too.
Yeah.
There's unfortunately we got like a half an hour to an hour of meetings with individuals, like in the group and stuff like that, but you gotta like cut it at that, unfortunately, because you got one right after that.
Yeah. I do feel bad, but that's things that I can't really control.
Well, I mean, I think everyone in the group, for me at least, definitely understands.
Yeah, everyone's very understanding. That's why I love, like I said, I love the students. I love the people that we have around us. Everyone understands what's going on.
100%. You gotta let the right people in, and I think we've both done a great job vetting people in and out of the group and seeing who fits the culture, who fits the locker room, and who wants to get better, who loves the game, but also who's hustling, who understands scheduling, and who's doing what, stuff like that. Andreas, put me in, coach. Actually, man, you show up every time. I mean, you guys are in your own group, and I'm not part of everything you guys do, but everything we all do together as joint groups, you're always showing up. You're always one of the first ones in, and that's a telltale sign of who's going to be successful.
Absolutely. 100%.
You guys can hear clearly, right?
Yeah.
Okay, it's not. Okay.
So in short, everybody in the groups, everyone on YouTube, thank you for showing up. Thank you for always the support.
Long story short.
Yes. All right. So I also started recording it. I'll go ahead and send you the recording too. I know you want to send it out to your group or put it in the database. But we also have it on YouTube now. So let's go ahead and get started. The people have spoken, and they want US 30. So there are 20-something people who voted, and 67% said US 30. So that's huge.
Love it.
All right, so let's go ahead and get started. Do you want to lead this off, Steph, or should I?
If you don't mind, just because I'm on my phone right now, I'm just trying to test out the. There we go. I'm just trying to test out things.
Having a blast.
Here we go. Yeah, I'm just trying to. Here we go. Eraser. Seeing how this works on my phone.
Mm-hmm. It's all good. So, like, while you're testing it out, I'll go ahead and I'll start this then.
Yeah, I'm okay.
All right, perfect. So, looking at the weekly time frame, that's what we're going to start off with. And as always, guys, feel free to ask any questions, jump into trades with us, all that stuff. We're doing this more so for you guys to answer any questions, any concerns, and making sure that, you guys are getting reps in. This is like one way of accountability, I guess, right? And so let's go ahead and start off with the weekly time frame. So I'm going to actually have you guys in the group start annotating what are some levels that you guys would mark off here. So let's start off with the most recent resistance and support. what is a level that you guys would mark off here? Go ahead and feel free to annotate. So when you're doing, there you go. So when you're marking this off, think about, what level has to be broken right now in order for price to continue pushing in one direction or another. And I'm going to extend this out as much as I can. Right there. Perfect. What about a support? All right, all the way down here. But before price comes all the way down here, what level needs to be broken? Someone just marked that off. Do you guys want to explain real quick why to mark this off before this?
A lot of big projection in that area.
A lot of liquidity. And what gives you the confirmation of the liquidity? How do you know there's liquidity here?
The wicks.
Wicks.
You got the wick rejections, but the biggest thing is the volume that follows, right? So every time you're thinking about liquidity, think about volume. So as soon as price taps into this area, look at the volume that tends to follow, depending on the structure, of course, but every time price taps into this, a massive bullish volume, right? And then we retrace back into this area, and then you get a push right back down, and that's where you have some of these fake outs. That's what we closed above right now as well, and that's kind of where we're holding on to a support, it seems like. So if price can tap into this, depending on a resistance or a support, we can expect massive volume to kick in. And that's the same exact thing that has happened here to the left. So anytime you're thinking about liquidity, think about the volume. So good job on that. Any other levels that you would mark off here on the weekly, or are we good to drop down to the daily?
For me or anybody else?
Anybody. For you as well.
No, I was going to say, I think that's pretty much good. That third level you guys just marked off is something I would have as well. Where you can possibly retest and then continue up for that previous wick.
Yeah.
That previous high that we just created.
So now let's go ahead and drop down to the daily. So a lot of gaps essentially that have happened around this time, but there was a ton of volatility around this time too. So around this time in 2016, we had Trump coming into office. And what was the sentiment with Trump coming into the office? Steph, you could answer this, or anyone else, you could answer it as well.
Yeah, appreciate it. I think it was just a lot of insecurity, a lot of people not knowing what's going to happen. I mean, I even remember watching the news when he got elected and just being like, wow, like Donald Trump is our president now. Like, nobody knows what's going to happen at that point, and he's obviously very unpredictable. So I think that was pretty much the thought process at that point for a lot of people.
Yep, and also more like, unlike other presidents who are more on like the political side and whatnot, he was more on the business side, right? That's how everyone viewed him, that he was a businessman, and essentially that's what the sentiment was. So if you're looking at US 30 and you have a president who comes in who's probably, let's say, heavy on business, what does that basically mean for the equities?
Pretty good.
A good thing, right?
Yep.
And why is that?
Anybody want to answer?
Why is optimism for businesses a good thing for the equities? He's going to focus on the equity markets. And what else? What is he essentially going to do for businesses that would cause, optimism in the equities?
What's going on right now in the with central banks? What are central banks doing right now? They're increasing rates, right?
Increasing rates, but it's also because essentially, cutting down those taxes for businesses, making investments, making, loans and all of that more attractive for businesses. Think about a business and what goes into a business, right? A lot of businesses, they're going to take out loans to operate, right? And you want to incentivize investments from a business perspective, and that's where that optimism comes in. Exactly, tax cuts. all that type of stuff. That's where the optimism kicks in. So when you're looking at it from a technical perspective here, we're looking at the weekly time frame and we're coming back into these liquidity areas, right? And that's when, about a month ago, that's where this uncertainty was when Trump was coming into the office. In January, he came into the office, and after that, we start to see this push back up happen. Now, as we're holding on to this liquidity area as support, which is being clarified here onto the daily time frame with that liquidity grab and push back up, can we see this area once again being held as support prior to a continuation back up? There was a ton of optimism when it comes to the equities and when it comes to businesses from Trump's perspective.
What I was getting at too with the central banks is when he first came in, he lowered interest rates.
Yep.
Which is obviously going to make it more favorable for businesses to do business, raise GDP and all that stuff. So he was basically doing the opposite of what's going on right now with the central banks, which was adding optimism.
Exactly. Now let's go ahead and drop down to the 4 hour. I believe there's no other level. If anything, I'll probably just mark off the support up top here if we can continue breaking above this. But we're on the daily time frame, so let's see if we even get there in the simulation session today. Let's go ahead and zoom out to the 4 hour time frame. So here we start to see price tapping back down into some of these support areas, what people would call like double tops and whatnot, or double bottoms, and then a push back up, and you start to see this bullish structure that starts forming at these areas. There are gaps and whatnot, but as you can see, these gaps do end up getting filled. Price pushes back up, you start to see these nice retracements, a deeper pullback into previous consolidation areas, test the structure, and then you finally get the momentum to break past this. And then we come back down once again, and we're tapping into this very key area. So if price can continue holding on to this area as support, can we essentially look for any buy opportunities, right? Can we essentially look for a push back up? The only way that I would entertain any sort of sells is if price continues breaking below this 16,437 area. So essentially below this zone. That's the only way that I would entertain any sort of sells. Other than that, we're still maintaining this bullish structure. So let's see if we have enough volume to continue breaking above this. Higher time frame structure was still somewhat bearish, and we were testing the highs of that bearish structure. So what we need is even more liquidity, hence we're back into this area in order for us to break out of that higher time frame bearish structure. So if you come back up to the weekly time frame, notice how price was just pushing back down. We ended up and somewhat creating a little bit of a lower low here, and now we're pushing back up. So in order for us to grab that liquidity to break out of this structure and even come back into some of these areas, we would need more liquidity, which is down here, prior to a push back up. Make sense for everyone?
Fully agree.
Perfect. So coming on to the 4 hour, that's essentially what we have. I wouldn't really mark off anything. What I want to see is, any bottom wick rejections, top wick rejections, liquidity grabs, and then look at, where's price headed. You come on to the hourly time frame, and then you start to see this nice little retracement happening, a gap down that happened here. So this is where the candle ended up closing, the last hourly candle, and it seems like there's some sort of a gap up, and this is probably where the price is going to start opening up here. We can drop down to the 30-minute time frame. Same thing. Another thing that you could do if you want to narrow in your zone, and let's say you're looking for scalp opportunities, is maybe marking off this resistance right here that price keeps tapping into multiple times, right? We've tapped into this multiple times right here. So if I'm going to look for any buy opportunities, they'll be above this 16,550 area. Any sell opportunities below the zone. For me personally, this entire range in between would be a no trade range.
Sharma, if you could go to the 1 hour real quick.
Yeah.
I feel what I would do here for support is just mark off safe sells below this area. I don't know if that is
yeah, we can do that
for you. It's a little bit higher than that.
Right here.
Yeah, somewhere like that. I feel like that's where I would want to sell from, because you got all that clean move to the left over there.
Yeah. So what you basically want to see here is price pushing back down, let's say below this area, retest into that liquidity area that we just marked off of like the weekly time frame, and then continue that sell off. Perfect.
And then you could retest below that area too.
Yeah.
And we could potentially break it, retest it, and then continue down to what is that? 16,200.
Yep.
Thing.
So those are going to be our few levels here that we're going to pay attention to. We can drop down to the 15. And same thing on the 15. You had a nice little resistance here, a quick fake out, and then price pushing back down. So let's go ahead and play this now. So there's that little gap up. Price is trying to push.
And what time is it, Sharma?
This is end of Asian session. Remember the days he would talk smack on Twitter regarding the Feds? Good times.
Yeah. Wait, do you know who Andrew Schultz is?
No.
Oh, he's a funny comedian, but he just did a stand-up, and he actually took it off of Netflix and put it on YouTube for free because Netflix wanted to kind of like censor it and stuff like that, all that business.
Yeah.
But one of his jokes was like talking about what his tweets were like back during the presidency and how like entertaining they were. But you gotta watch it. I'll send you the video.
Yeah, definitely let me know. I'll watch that this weekend. It was pretty funny. I mean, it was some like scary times too, because you didn't know what we were going into with him. But I thought the stuff that he would do was just hilarious, more than the stuff that he would say.
Yeah. I think who was it? He was talking about. I'm sending the link in here to the chat. But he's like, back during the presidency, he used to have all our group chats going crazy. Like one time, he tweeted out that he was shooting paper towels to the Puerto Rican people after the hurricane, and just shooting them like basketballs. And he's like, "There's no way." He's like, let alone I turned on the news, and there he was fading away, paper towel shots.
It was crazy.
Looks like we're getting a little retest here, potentially. Got two gaps there.
Someone said, the calming effect on YouTube, the guy would wake up every day and choose violence. Different targets.
Oh, wait, what did he say in the beginning of that?
He said guy would wake up every day and choose violence, just different targets.
Well, it's weird that he just said that, because that's what the comedian said in that special.
Oh. Maybe he watched it. Did you watch it, Calming Effect? Alright, I'm just checking through different time frames, see where we are. This week it seems like we're pushing back up bullish here. So I want to see, before any buys or sells, I just want to make sure these higher time frames are in the same direction.
What time frame was that? The 4 hour?
Right here?
No, next one. Oh, is that the daily?
That's the daily.
You see that previous daily candle? We're technically in a bullish trend after breaking that previous resistance, and that previous daily candle just closed the bearish candle with that top wick. Anytime you're coming up, that wick might get filled.
Yep. And I think this is the same setup that you talk about multiple times, where this previous candle closed closed down here, and then we had a gap up that happened.
Yes. We had the gap up, and then where's this stuff? Trying to annotate here. There we go. Yeah, that previous candle, that daily candle, a lot of times that wick gets filled. But we'll see. And we're holding a healthy support right now.
Yes, sir. So last 30 minute close bullish. The new one already pushing back up. Yep, there you go. Perfect. Are we skipping to New York session?
To you guys.
You guys want to skip to New York? Is there anyone who trades London?
Jamie, how you doing, buddy?
Good, brother. Just here on my phone because I'm working at the same time, so that's why I'm staying quiet. Can't annotate.
You and me both. You're good, man. Just checking in on you. We got Young and Sharjeel in here. You guys are doing well too, man.
Alright, so we're in that pre-New York session here now. We can check different time frames. So daily, pushed all the way up. Now we're tapping into this resistance. We want to be very careful here. Come on to the 4 hour. Nice little support. Once again, tapping into that resistance. Another confirmation to be careful here. And then hourly time frame, held onto a resistance right into that level, right? Where we close back down bearish without even breaking these previous highs. So what I want to see is, are we going to see a deeper pullback into these areas? Or are we just going to have enough momentum to continue breaking past this? Drop down to the 30. Same thing, a little bit of resistance. I just want to see those lower highs being formed prior to a continuation. We can also check news. So there is manufacturing PMI coming out, ISM manufacturing PMI. You also have final manufacturing PMI. You got GDP data coming out from Canada, but that's not going to really do much for the equities. And then you also have economic optimism. What's up?
You didn't trade US30 at this time, right?
No, I didn't.
Were you even trading at this time?
No, this is 2016.
Yeah, no, I didn't know when you started exactly. I know you started young, but...
Oh, I was actually trading around this time.
Okay.
But I wasn't, I thought you meant like on YouTube or SharmaFX. No, none of that.
No.
None of that was there.
Yeah. But it was destined.
What's that?
I said not yet, but it was destined.
Oh, yes.
So this is the 30-minute. Looks like we're just ranging over here so far. I'm curious if this current resistance gets broken. Like the main support and resistance right now. Let's see if this works there. Yeah, I know it's a little messy. But breaking out of either one of these, I'd much rather wait for that to break before taking sells. But the current resistance, if we break that, do we have enough range to take price up to here? Again, excuse my artwork, but looks like it do.
I definitely want to see this entire range here being broken. That's what we're tapping into multiple times. So if we can get that, then I'd look for an entry.
Okay.
My only concern is that way too many times, even in current market conditions, we've just seen price consolidate here, right? Where it'll set up nice for like that support, that resistance, but all we end up doing is just testing previous highs, reject, and then pull right back down.
So it's 7:30. New York hasn't yet.
And then 15-minute right here. Same thing. We're closing almost as a doji. The current 15 right off the bat broke the highs, but all we did was come back and revisit into these resistance areas and then pull back down here.
For this level to be broken. Yeah, clean price action coming into here.
So like a break and retest below this and then maybe take some partials around here?
Yeah, it would be a little bit higher, like somewhere over here.
Okay.
We'll see, but I think you may have safe sales depending on how big the range is. Do you see the actor that played Hagrid died?
Oh yeah, that was pretty sad, man. I loved Harry Potter.
Right. Oh, did he?
Yeah. I had the books. My brother had like all the books, and then this was like years ago when even he was like in high school, so I was probably like in elementary or middle school around that time. And we used to have like the movies downloaded on the computer, and we used to watch it there.
Oh, it's awesome. I remember having the computer game. I don't know if you remember that, but that computer game was the best. Like an RPG, just running around Hogwarts all you wanted.
Yeah.
It's kind of like Grand Theft Auto, but Harry Potter.
Yep.
They make a pill for that.
Jamie. Love it.
The books are definitely my favorite. I used to love reading books. I mean, I still do. It's just that I don't read Harry Potter books anymore.
See, I mean, you might as well watch a movie if you're reading like books like that nowadays. Like
Yeah.
it's basically entertainment. You know, like I don't I couldn't tell you the last like entertainment book I read.
Well, I think it depends on like the movie or the book, because one of my favorite books was also Beautiful Boy, but when the movie came out, they legit started the movie in the middle of the story.
Oh, really?
Yeah. And like some movies in general just don't do justice if you've been like a huge fan of like a series or something.
Mm-hmm.
So, I mean, but I think the Harry Potter movies, they did the justice. For sure.
No, absolutely. I mean, I've heard the books are even better, right?
Yeah.
Yes, that's normally how it goes too. I'm just saying, like nowadays, and especially like you guys all on the paths that you guys are on right now as entrepreneurs and traders. Like, if you're gonna read a book like Harry Potter, it's entertainment. You might as well watch a movie. You know, it's might as well sit there and watch Netflix. That's kind of where I was getting at. Like
Yeah.
the last time I read a book like that, I don't even know what it was, but it's all pretty much trading books, self-help books, business books, stuff like that.
That's legit just all, like, my entire bookshelf is that. I
Yeah.
have, like, a couple of books which are, like, entertainment and whatnot. My friend gave me, it's called The White Tiger. I don't know if you've seen the movie.
White Tiger? I don't think so.
So, the book came out and then the movie came out, but it's basically about this guy, like, who's, like, super poor and whatnot, and he used to work for, like, I wouldn't say, like, a rich family, just, like, a well-off, family, and then how he kind of makes his way to be, like them, like, rich. It's kind of... You gotta read the book, I think.
Like Rich Dad Poor Dad.
What's that?
It sounds like Rich Dad Poor Dad.
Basically, but... No, you gotta read the book.
That's pretty much your nice way of saying not at all.
Rich Dad Poor Dad I really like. I like all the series and whatnot of like all the books. But this one, it's the story of a guy and like the stuff that he is willing to do in order to be well off. Because when you come from a background like that and you've always been dissed on your entire life, because of your social economic status, you get a certain mentality.
Oh yeah. I know that feeling.
Alright, so New York has officially opened up, so we're starting to see a little bit of a pullback, but we're not breaking these lows just yet. Hop up to the 30-minute, you see a little bit of consolidation, price is trying to break, but again, is this just going to end up being a higher low in order for us to just continue pushing, or are we going to see price actually pull back down? And I think safer sell is exactly what you said, Steph, down here.
Yeah. Sharma, I don't know if we really touched on it this morning, but what do you think about CPI?
It was expected, and you could see that on the micro level too, with just prices increasing all across the sectors. It wasn't just food or energy. I mean, for the most part, they have been the outliers, but we're starting to see inflation being trickled down. And then with PPI coming out, double of what we were expecting, it's going to be the same exact thing for the next couple of months. And I think it's going to actually get worse in the holiday season because regardless of how bad inflation is, people are still going to go out and shop for their families as much as they can. Right, for holidays. And I think a lot of the markups, they're going to just continue on.
Food when it comes to Halloween and Thanksgiving, and then in everything else, non-core CPI, it's going to rise for Christmas and throughout the holidays, like you said.
Yep.
It's going to be a nasty winter.
I've been talking about this with like Andy and like the rest of the group too, where it's like, you know, when economic data comes out like this, like in financial markets, we could tell where it's price headed and we get excited because we're catching good moves, this and that. But we have to keep this in our mind that there's actual real people who are getting affected by this. There's like 401ks that are being blown right now because of the equities just dropping down, right? And there's like actual people who are on the verge of, you know, not being able to pay rent, not being able to pay their mortgage, losing their homes, and, you know, just so much crazy stuff that's happening. So I keep telling them, and we're probably going to do a webinar, you know, very soon in the next couple of days or so on how to pretty much prepare yourself for the recession. Many of people who are older than, like, you know, myself and Stefanos, you guys have lived through a recession. Like, we were very young. Like, you were probably like in high school or college stuff.
I was going into high school. I was in 8th grade.
Yeah, so, and then, you know, I was pretty young around that time too, but there are people who are much older than us, and you guys have experienced how bad the last recession was. So, you know, just start preparing yourself already. If you're part of the financial markets, if you're trading, if you come onto, you know, our live sessions, if you watch our weekly outlooks, if you're part of the group, it doesn't matter. As long as, you know, you guys have heard us talking about the data coming out and what does that essentially mean. You guys still have time, if you can, you know, start preparing yourselves.
And it wasn't, we weren't increasing rates in that last recession either, into the recession.
Yeah.
That's never happened before. That's happening right now.
And the best case scenario is maybe, you know, it's not as bad of a recession as last time, you know, which is debatable, I think, when you're looking at the data. But what's the best case scenario? You probably just come out better on the other side, right? The worst case scenario is never being prepared for it and then getting caught up if something, you know, if it is worse than what we think or worse than what they're telling us. It's better to be prepared than, you know, be sorry later on.
It's best to be good at what you do. Like, I listened to, and speaking of Rich Dad Poor Dad, watched an interview with Robert Kiyosaki recently talking about when he was, when he went over to Vietnam when he was younger. He was a helicopter pilot, and he's talking about how when he was going in there, when you got deployed to Vietnam, your life expectancy was 30 days, right? So, like, when your life expectancy is 30 days, you're going to do whatever you can to get out of that situation, right? Or do whatever you can to avoid dying. So what he did was, his main mindset was, I'm just going to get out and be a better pilot. I'm going to do whatever I can to be the best pilot I can be. So that's all he focused on at that time, and obviously he got out of it and wrote a best-selling book, but and did a lot more than that. But it's the same thing for you guys. Like, you guys were going into a recession right now, and you guys are literally working on a skill that prints money for yourself, right? Like, at the end of the day, I know we always talk about skill set and, you know, not focusing on money when it comes to trading. And that's what you want to do in the actual sense of being in the market and trading on a daily basis, being in the market. You want to focus on the move. You want to focus on the pips, all that stuff. But at the end of the day, you guys are here to make money. And that's all life really is, right? The life is really just a game of accumulating the most money you can, right? And if you can't, you're going to be on that lower level of people, unfortunately, in the world. If you can do it and you can accumulate money and take money from other people's wallets and put it into yours, whether it's whatever kind of business or anything that you do, any kind of skill set that you have, like trading, the better that you could do that, the more on top of everything you're going to be in life, the happier you're going to be in life, because it's a lot easier to be happy in life when you're making solid money than it is when you're not. I'm not saying it creates happiness. I'm just saying it's a lot easier to be a happier person and a more joyful person and stuff like that when you don't have to struggle for bills and stuff like that. But again, life is just an accumulation of money, and you guys need to focus on your skill set and get as good as you possibly can in this to start extracting money from the markets on a regular basis.
I really agree with the fact that you know, what you were talking about, where it's easier to be a happier person when you have money versus when you're someone who's kind of struggling for it. I 100% agree with that. But, you know, that's why I also don't understand when people try to rush this process, where it's in this, or like, you know, when people start getting FOMO, or when people start talking about, well, I missed this trade, oh my god, and you start beating yourself over it, because this is the market where you could make money based off of, whatever structure that it's in, whether it's selling off or it's pushing up, you can still make money in both directions, right? So I think that's that's a blessing, essentially, versus like when you're looking at the stock market, look at all those people who probably like bought the highs thinking that there's no more sell-offs that are going to happen, this and that, like just a couple of months ago, and now they're sitting in like, there's legit people who take out debt to invest in stocks.
Mm-hmm.
And now they're sitting in like these massive losses.
All my clients that know that I trade, they're all like, "Oh my god, like, are you doing all right now? Like, market's crazy." I'm like, "I trade the currency market, baby. we make money either way."
Yep. That's why, like, I really emphasize, getting the education and being educated about what's going on in the market and understanding what's happening in the market instead of just, trading based off of pure emotions. That's why I really say all the time, be analytical in the markets, because that's what's really going to help you.
Do the opposite of what most people do. Most people are emotional in these markets.
Mm-hmm.
Do whatever you can to keep that emotion out. So it's always going to be part of your decision making. Just make it a lower percentage. Your emotions over logic.
We're human. We're meant to have like emotions, obviously, but control it as much as you can.
I feel like that was something I used to say, like keep your emotions out of the market. But as I've evolved and gotten better at coaching and stuff like that, I really realized, and trading too, really realized that you can't keep emotions out of your decision making process. It's got to be at least part of it in a small way. It's just, can you bring it from 80-90% of your decision down to 20 or 30?
I think even lower. I think even 5 to 10.
Yeah, can you bring it down to 5 to 10 percentage based on your emotion and your logic, your rational thinking? It's got to be all rational, almost.
I think it was I don't know if Pat's in here, but we were
Pat's sound asleep.
We were either like in a live session, or it was a Zoom session, or a simulation session. I'm not sure, but we were on Zoom together, and it was, I believe, interest rates that came out, and I took a trade, and we had this conversation a day after interest rates, I believe, or there was like some sort of high impact news that came out, and I took a trade, and we were talking about price was like well into profits, and I believe it was interest rates, and the FOMC press conference was there, and price was like well into profits, and then I was still talking about how price is still going to push up. This is a liquidity area from a technical perspective. Powell is going to be answering questions and all that stuff, but from a technical perspective, you're going to see price pushing back up, and the levels I was marking off was actually like in that little stop loss range that you have. So essentially what I was talking about was like, I know price is going to come back above my entry. I think I was going to sell for US 30. And I was talking about like how price is going to come back into like the little loss range. And he was talking to me about it. He was asking me, he was like, I don't understand like how you were completely fine with that. Like if price pushed back up, like I would be freaking out. And he was like, you were just continuing on talking. You don't have emotions. You didn't care. You didn't even be like, oh shit, or like man, or like anything like that. And I was like, from a technical perspective, the price is there, you could see it, and so that's why, like, that's what I was pretty much analyzing. That was all just the data, and we've seen this happen so many times. Interest rates have come out like how many times in front of us since we started trading, and we see the reaction, right?
Yeah. Yeah, I think that's the main difference between a professional and... Can you hear me, by the way?
Yeah.
Okay. I think that's the main difference between like a professional and somebody that's more of an amateur. Someone that gets too emotional in the market, they'll panic in that situation.
Mm-hmm.
Hold on, I'm just going on mute. I'm running into the bathroom.
No worries. So I think this is where I'm going to end up looking for a trade opportunity. So let's go ahead and look across time frames first. So we're going to go on to the weekly. So weekly already made a bottom wick and pushing back up. Come on to the daily. Same thing, we're pushing above this resistance area that we had marked off. And then come on to the 4 hour. That's that bottom wick rejection, liquidity grab. We're breaking these previous highs, which is where majority of my concern was. Are we just going to end up faking out and then pushing back up? Or are we going to, fake out and then come back into this area? So it seems like we're pushing above that. We come on to the hourly time frame. You've got a nice little strong support being formed here and then a push back up. But this candle does not have a bottom wick, so that's where another concern is. But when you drop down to the 30, we've got a support and the candle closed. The new one made a bottom wick rejection and it seems like it's breaking these highs. We can drop down to the 15, same thing, nice bottom wick rejections, a push back up, and the current one is also giving us a bottom wick rejection as it continues pushing up. So we do have about 30 minutes or so until this hourly candle closes. So I think I'm going to go in with a 1% risk here. And first, let's place the stop loss. I'm going to place it right into the support. So I'll give price enough room to kind of make any wick rejections and everything like that. But if it comes back and taps into the zone, I'm out of the trade. And then with TP, let's hop up to a higher time frame. Zoom out a little bit. I think that's... Actually, let's wait for a tighter stop loss then. Because I wouldn't feel comfortable placing a stop loss all the way down here just yet. So I'm going to wait for a tighter stop loss then. But if I could, this is where I would take an entry and then stop loss right here. I'm going to remove all of this just for a quick second, just so I can look at the price action. So that was that entire bearish trend that we're starting to break out of. Alright guys, let's answer some of your questions here. Give me 1 second, I'm going to scroll up on YouTube. You seem like you never lose, so what do you think about more higher risk compounding? I would not say do that. And it's not that I never lose, it's my losses are extremely small. My wins are much bigger than my losses. My losses are probably like a couple of $100, even with the current risk that you guys do end up seeing. But I still say go in with, I only do around 2% risk still, so 1 to 2%. Speaking of Robert Kiyosaki, anyone watch his recent interview with Patrick Bett? I have not.
I did. I'm back.
Oh, did you like it?
Yeah, it's very good.
I gotta take a look at that too then.
That's actually where that quote came from. What he was talking about with Vietnam and stuff.
Oh, okay. Got it. Welcome, Dallas. And
so were you entering this?
I was going to, but I didn't want to have that wide stop loss because that's what the little message popped up saying that the stop loss was too little or like too far. And I didn't feel comfortable having a tighter stop loss up top here.
Yeah, I feel like I would wait for this resistance to be broken.
Yeah, if that's broken, then I will place the stop loss down here.
Yeah, once we close above that. Okay, we just got that rejection. It's the 30-minute. That was a strong close, though. So looks like it could be heading up, but you wanna wait for that resistance to break.
Absolutely. Welcome, Dallas. So we haven't taken an entry yet, but yeah, we did the entire analysis. We even had like conversations going on about like I don't even know how many topics now.
Dallas Buyers Club.
Of course. All
Is
right.
he in here?
Dallas is on YouTube, so I was just going through the YouTube
okay.
chat because I didn't get a chance to take a look at that just yet. I'm gonna look for a buy here though. I'm gonna go in with that 1% and place the stop loss. Still. Oof.
Huh?
All right, I'll go in with the 1.5%. Does anyone want to take an entry here with me? So
I
then
think I'm gonna wait for that candle to close. We're getting towards the end of New York, and this is a time that volume pumps in, so you should be good. But I do want to wait for that candle to close above resistance.
all right. So let's actually drop to the 15 then, and then we can see if this candle ends up closing.
Okay. I mean, you can do what you want. I was saying that's what I was waiting for.
All right, so I'll go in with calming effect then. Calming effect wants a 0.5%.
Sure.
So let's do a buy here. I'm still gonna play a stop loss. Let's say right underneath. All right, based off the 15 then, underneath this candle, and then that is still pretty tight. Then I would like it, but I'm gonna place the TP up top here then for the time being, and then we'll go ahead and move it and adjust it as we would need to.
I feel like if this was the 30-minute here, and we broke the highs of the previous, and we broke the high of that previous wick to the left of that as well, I think I would take this. But being that it's the 15-minute, I would. Yeah, I'm gonna wait. What time is it? 15 just closed. Okay. Let me see the. What's up, Justin? Let me see the 30-minute. Yeah, I think I'm gonna wait for the 30 to close here.
All right.
If I miss it, I miss it.
All right, Andres, you want in? Right here?
Yeah.
All right. How much do you want to go in with?
I'll just do 1%.
All right.
And then same stop as you.
All right. The risk is too low. The stop loss is too far, so you're gonna have to tighten up your stop loss.
Am I able to risk less?
If you risk less, then it's gonna be the same problem.
Oh, okay. You could put it up a little bit more.
Right here?
Yeah. That's perfect.
What is it? Do we need to raise the leverage?
The leverage is at 200 to 1. So the
If
only
we raise it to 500, would that help?
probably, but I think I would have to restart the simulation for that, no?
No, yeah, not now. I'm saying next time we do US
Yeah.
30.
Next
Because
time we
we've
could do
been
that.
getting that problem.
Yeah. So actually let's do this. And then give me 1 second here. Okay, so this is the 5-minute time frame. Do you want to place your stop loss based off the 5-minute or 15?
I'll just do the 15.
Okay. So based off the 15, I think your stop loss would have to be somewhere around here. Anything after that, it says that the risk is too little.
Alright, if we could do under that 15-minute wick, then that should be good.
Okay, let's try that out. Oh, same issue.
Same thing.
Somewhere around here is pretty much the last point.
Okay, well let's go for it.
Alright, and then where about your TP?
TP, same area as you as well.
Alright, perfect. Let's go ahead and do that. Shall I play it? Let's go ahead and play it. I got you, Dallas. Here's the 5-minute. Alright, this is the last 5-minute before the 30 closes. Okay, and here we have the 30 close right up top there. We could check the hourly. Hourly is also extremely bullish. Check the 4 hour, zoom in a little bit. Also, liquidity grab continues to push up. I think at the very minimum, we have enough volume to probably come back up top here. But I do want to see like some more higher highs and higher lows being formed prior to even moving my TP first. So on this account, to max out the 3%, we have 0.5% remaining.
Yeah, I think if you try to take a trade with that 0.5%, your stop would have to be so close. I don't think the entry would make sense.
No stop loss.
Yeah.
I'm just joking. Don't do that.
US 30? Nah, what are you talking about? Kamikaze.
Risk it all. Friends of ours just had a baby. I can't believe it.
Oh, congratulations to your friend.
Thank you. I appreciate it. I did so much work.
The support.
Yeah, right. Nuts. You go to the 30-minute?
Yes.
So that was a strong close there. Being that I want you guys to take a look at this. I don't know how this works on US 30 as much, but it does on GJ and Gold. But if you look at the previous 30-minute candle's top wick and the new candle's bottom wick, they're basically identical. So for me, I've been testing this out a little bit. As it passes the high after creating that small bottom wick, after such a strong close like that, would a valid entry be as it passed the high with your stop loss under the entry candle?
Mm-hmm.
That's something I've been looking at on GJ and Gold for quite a while. When you have those identical wicks, it's nice.
Once you see that volume pushing on US 30, this thing's just gonna go. It doesn't really play around or stick around just to, you know, it's either gonna consolidate or it's gonna give you those nice retracements, but once it goes, it goes. I think just based off that 4 hour time frame, that little bit of a bottom wick, grab that liquidity and push back up, this is the very minimum that we're probably going to go up to. But what I want to see here is like some sort of a bearish candle close, at least like on a 30-minute, 15-minute, and then look to increase my TP. Without that, my concern is that can we risk an exhaustion?
Almost 8%.
That 1.5% and that 1% or 0.5%, all that was just like 1 penny. But look at, instead of even looking at like the dollars,
The points.
massive movements. So that's why you don't need to have like massive lot size or increase your risk an insane amount on US 30. This is what I mean, like I've said it multiple times as well, is that your equity and your strategy and all of that is going to differ depending on what pair that you're trading. So something like this on, GJ or gold probably would not give you an equity increase that you're looking at right now. Mm-hmm. But looking at the volatility that US 30 has, this is something that's normal. So what you would be maybe like risking a 2% or 3% with GJ on like a setup like this, you want to dial back a little bit when it comes to equities. You can't take partial on a penny. That's what I was also looking at, calming effect. But what we can do is move to break even or at least trail our stop loss. So what I'm going to try to do is trail the stop loss here, just to where that other entry is. Let me know if you want to do anything to your entry or to your entry.
Yeah, I'll do break even if it comes back to my entry being valid.
Okay. You want to do break even right now?
Yeah,
Okay,
please.
perfect.
Thank
There
you.
you
Man, Andreas sounds like Tiger in our group.
go. The entry for 5 minute, it's pretty much gone, but I'm just looking at it to see if we can see any hints of retracements. I start to see some consolidation here. I start to see some exhaustion, but maybe we'll consolidate out on like a 5 minute and then continue pushing a bit more. Check across time frames. These higher time frames are going to tell you exactly where price is headed. So we're pretty much getting close to tap into that TP right there. I'm not going to move my TP just yet because I do want to see pullbacks or at least some sort of a bearish candle close or something like on a 30-minute or 15-minute. That would give me confirmations that you're kicking the sellers out and then pushing the buyers right back in. So a setup like this, where this candle left a massive top wick rejection, that's an entire range for the following candle to come back and fill, which we didn't do, right? And if you look at the current candle as well, that's that indecision where price keeps trying to push back down a little bit, and then it broke the high, but it's just ranging in this little, top wick and bottom wick that's already formed. It's not breaking its own high, it's not breaking its own low, so I don't see that volume. It created those wicks and it's just ranging in those wicks. So this 15 is going to close here in just a few minutes. So there you go, right here. Bottom wick rejection, close at the heights of its range, and the following candle is now trying to push back up. These right here is sign of exhaustion. Yes, price is pushing, but this is not where you want to be looking for an entry. If you're already in a trade, this is where, if you could take partials, we can't obviously right now, as I showed up the trades. Our lot sizes won't permit us for partials, but this is signs of exhaustion. So what you can do is trail your stop loss even more. We've already trailed it above entry up top here. Or if you could take partials, you would be taking partials. But this would not give me confidence to increase my TP just yet or look for another entry.
Other times it fills that wick and then rejects.
That's what it seems like we're coming up to do.
Yeah.
This is also about to be an hourly close here soon.
Some 3 solid candles so far. What is this, 12 p.m. Eastern?
Close to that time, yeah.
Okay.
Alright, so you got the hourly close right here. There you go. Right off the bat, it's pulling back down. So either this is going to be a bottom wick rejection on this hourly candle, or it's going to continue pushing back up after, a bottom wick rejection and then push back up, or it's going to come right back down. Either of those two things. How do you figure that out? So you come onto a 30-minute time frame, and if this candle breaks this previous 30-minute low, I would be out of the trade because now that means either we're going to consolidate or we're going to retrace. But essentially, this is the start of the market trying to collect more orders. There's only 2 ways that the market's going to collect orders: retracements or consolidation. But if it only comes back down and tests the low and flips, or it just ranges into this area, then that tells me that there's still enough bullish momentum for us to just continue pushing.
Since we're getting near the end of New York session, I usually just like to take profit where I'm at.
Okay, you want to do that?
Just to secure, yeah.
All right, there you go.
Awesome, thank you.
Of course. So your trade ran for about 752, we call it points instead of pips. Justin. In the chat, Justin said, last time I traded US 30 over a year ago, I made money so quick, it ruined my discipline and focused on money instead of wins, and I went crazy, and you can guess how it ended up. Not good.
So you stopped trading it? Not the pair's fault.
I think it's more of, it happens with US 30. I remember the first time we did a simulation session, Steph, you were running it US 30, and as soon as, and you know, I have been trading it for, you know, some time already, and I was like talking to you about it, and we did the simulation session, and then I remember you saying, this percentage increase, like on US 30, I don't think something's right. That's what tends to happen.
I thought it was broken.
Yeah, that's what it tends to happen.
Decks.
Yep.
Messing with us.
Alright, so we risked a total of 2.5% on this, I think it was a $1,500 account that we started off with, and we got a 10% equity increase. Or I think it was a $2,000 account, let me just check. It was a $2,000 account, and we got a 10% equity increase, risking 2.5% here.
Beautiful.
Any questions, comments, concerns? So the first one we closed manually, the other one got closed by TP.
Was that the history?
Yeah.
If you go, I love going over the closed trades.
Okay.
See that tab? Yeah, I think you'll end up liking this better. I like it better now.
Mm-hmm.
I normally look at that instead of the history.
It gives you all the
It might not
stats.
matter to you, but it gives you everything that you need.
Yeah, so how long it was for and, you know, whatnot. But
it's cool. And then you can write a little something there for yourself.
Yeah. And then coming back even down to the statistics and everything. But overall, does this make sense for everyone? Like, how do we end up taking the trade? Managing the trade?
BJ, I was worried about your entry because we still hadn't cleared the highs on the left.
Uh-huh.
So I was worried that it could reject from there.
Uh-huh.
You entered, I think, before the candle had closed, so I just wondered how, why you got the confidence to do that, because I thought we could reject from those sales.
You remember me talking about always, like, breaking the highs, breaking the lows, testing structure, or testing the volume?
Yeah.
That's basically what price was doing here, right? So you got that little bit of a bottom wick here, and then price was pushing back up. We did push up into these areas. So when I start to see that, where price is starting to break or fill its own wick and then pushing up higher to create a new wick, that gives me confidence of that bullish volume, and that's what I executed on, essentially, along with the confirmation of the different time frames where we were pushing back up. Majority of the confirmation comes from as soon as I looked at the 4-hour time frame here, and we got that liquidity grab and then push back up above this. So when I got the confirmation from the 4-hour, 1 hour pushing back up, closed above it, and then you come onto the 30-minute time frame, and then you see that the candle is filling its own top wick and breaking even higher and creating higher top wicks. That's volume being tested.
Yeah, okay. Yeah, got that. Got that, thanks.
All right. Any other questions?
Is it good?
Okay. SharmaFX said, how we splitting? You can take it all. Take the whole 10%. There is a question for both of us, Steph. Who introduced you guys to Forex, or did you teach yourselves? Do you want to go first, or should I? Okay. I started off with, stocks, and then got tired of, really the real reason is I got tired of the market closing at the end of the day, and then it opens up the next day. Started looking into what are other financial markets, because stocks are really made for long-term investment, not so much for day trading or anything like that. And then when I started looking into other financial markets, I came across a paper by Robin Lumsdaine, and it said the market set up in advance of whatever the Fed says. And so I think I've talked about this multiple times. There might even be a link, but if you guys are interested in reading that paper, just DM me and I'll send you guys the link to the paper. But in that, she was talking about the fact that the market actually starts setting up months in advance of interest rate news, of FOMC press conferences, of whatever the Fed is going to say. And that's kind of how I started moving into Forex, kind of started teaching myself about Forex. So that's how I got into Forex.
Yeah, it's kind of similar for me too. I started with stocks as well, and then I think I was introduced to this. It's not like IML, but it was more of a bot that you could basically. Someone introduced me that you could put your money into this bot and it's going to grow your money. And it was actually the foreign exchange market, which I wasn't too familiar with yet. And lo and behold, that bot wasn't really working too well, but it definitely interested me. Where I was like, I could just do this myself, and it was also the fundamentals behind foreign exchange was a lot more interesting to me than following companies and stuff like that. I was more interested in. I love history and geography and stuff like that anyway. So when I heard that the foreign exchange market is more about central banks, prime ministers, presidents around the world, GDP, basically the health of any kind of economy, I got more and more interested in that. So that's why I started getting into foreign exchange, and then my first mentor, which is down in Miami, and it's been the rest is history.
After getting to Forex, did you guys have mentors?
Yes, 2.
Perfect.
2 mentors. Mentorship is. Would I say you need it? No, but will I say you'll get a lot quicker, like wherever you want to go with it? Absolutely. You're just hurting yourself by not having one.
Mm-hmm.
Right? Like I say, you don't need it. Right? You can do all this on your own. But you're literally hurting yourself and setting yourself back by not having the right mentor and someone that actually puts a lot of time into you.
It's also the learning curve. For me, it took a very long time because I didn't join mentorships like that.
We didn't have this.
Yeah, well, we didn't have like actual mentors getting onto YouTube and teaching things. It was a very typical what you see like in Forex thing where it was flexing, cursing, non-professional way of trading, which is not what resonates with me.
No.
So that's why I didn't join it, but that's why my learning curve took, years basically, because I did already start learning all this stuff, economics, finance, this and that, very early on. So I was able to build a foundation already even before coming into Forex, and now I was like building on to that foundation even more and solidifying it. And then from there, people started asking me, really like my front face and like me starting coming in front of people was at Paul's live stream. Before that, I was just kind of on my own. I was like working for like other education platforms too. But once I saw that my values were not aligning with them, I left. And I think that's the biggest thing for me. I will leave if the values do not align. That's why I'm very selective. I think we both are very selective with the people that we work with, for that reason. And then people started asking about like a mentorship program. I had no intention whatsoever of ever building out SharmaFX more than just an Instagram page where I was going to share my journey of like trading, because I used to post a lot about it on like my personal account. But when people started asking, and it was like, a lot of people, not even just like 1 or 2 people, that's when SharmaFX mentorship kind of formed. I had no intention initially of doing this.
That's what makes like the best presidents, the best leaders, the people that weren't really intending to do it, but was basically asked by the people. That I think that's how we both started. It's just we were naturally just helping people, lending our hand. You were in Paul's group. I was helping people in Rakil's.
I wasn't in Paul's group. I was just on his live stream.
Yeah. You were just same thing with me. I wasn't part of his group either. We were just I would pop in there maybe once a week for the Asian session, see what's up, and he had a bunch of people popping in. That's how I met you.
Yeah.
But it's I wasn't intending to do this either. I mean, I know I love to help people, and I was doing it for free for a long time. I still do, but that's kind of how my mentorship came about. Same exact way.
Yep. So that is our journey. Thank you for coming to our TED Talk. But if you guys have any questions, just feel free to reach out to either of us on Instagram. Me, it's at SharmaFX. StefanosFX. But we will see you guys for the weekly outlook. Other than that, have a great weekend, everybody. Make sure you're back testing. Make sure you're not just hopping into trades. October is really the last month where you start to see some sort of like normal volume. After that, the holidays start, and as you get closer to Thanksgiving and Christmas, you're going to start to see a lot more consolidation. You're going to start to see a lot more liquidity dying down into the markets. So use that time to really refine your craft, backtest, journal, all that type of stuff to get better. Other than that, have a great weekend, everyone.
Guys, have a great week, all right? Let us know